Hello and welcome everyone. Good afternoon and good morning, depending where you are in the world. My name is Tom Leitch. I work at Bottomline TreasuryXpress, and sadly I'm on my own today as unfortunately the other speaker had to pull out. So bear with me if it's a little monotonous with me just doing it, but we will try and take you through the session today with much enthusiasm and hopefully excitement and interaction with you where possible. So today, hopefully to make sure you're in the right room, what we're going to cover today is going to be looking at the TMS evolution and where we've come from, where we are right now, and where we're heading with regards to connectivity and specifically also payments. There's been a vast change from where we were in 2008 to now with regards to functionality of the TMS. And again, we're focused on visibility inside, but now there seems to be more of a focus on the data and analytics side, and it can drive a benefit, which is now translated into the real world. Before we get into the actual nitty-gritty of the presentation, there is a little housekeeping, which I'm sure most of you are now familiar with, but I'll go through it anyway. So on the right-hand side of your screen, there is a audience Q&A. I have put in the presentation some polling questions, and as always, please do put some input or your thoughts on a certain topic into the Q&A section whenever we're going through this session, and I will answer and make it as interactive as possible. So jump on there, say, Tom, you're talking rubbish, or we like that idea, or this is what we saw and these are the reasons behind us doing it. Let's really try and keep this as interactive as possible. Throughout the session, please feel free, as I said, to submit those. And if you're having technical issues, there is a colleague on my side who will help you through that as well. Legally, we are recording this session, so please be nice, but also we're recording it so you can then watch it after the event, and we keep that up to 14 days available to you. I also encourage you, with the ACT being such a fantastic organization, to get engaged with it. So do join the ACT's active LinkedIn groups. Follow them on Twitter with ACT Update and tweet using hashtag ACT Cash Management. I'm also on LinkedIn, so do reference me if this is great, or just say don't speak to this group ever again, he's terrible. Anyway, without further ado, we will go through and start the presentation. Now, forgive me, I need to pull up the clicker on the right. And we will start with the first slide. So as I said, we're going through a welcome, which I've now completed, so lucky for you. What we're going to do next is launch a poll, which will outline a bit of the adoption of those on the meeting right now. And then we'll go through a bit more of the substance behind it, relating how many of those are using a TMS, how many are using payment systems, and going from there. But also, importantly, talking about the future state of the technology, both in payments and treasury management systems, and also a bit on the banks and neobanks. And we'll try and put it all in together. So if we could launch the first poll question, what we're looking at here is to understand what current technologies you're utilizing for your treasury and payments. Now, I'm sure you've been asked this many times before, but just to give us an interaction overview of what's going on within your organization, please try and segment it into: we are currently using a TMS, we're in the process of implementing one, we do not use a TMS but rely upon other systems, and currently manually using Excel and bank portals. So what I'll do is I'll leave that up there for a minute. Now, when I first started this journey back in 2011, I think we first started 10 years ago in this industry. It looked like, I think 42% of corporates globally were using a TMS, but most of them were also supporting that with Excel. Now that's changed over time, and we've seen that increase to sort of 60% if you're looking at the top bracket of, let's say, $1 billion and above companies. But I always find, even when we've been selling to corporates, that even though they may have a TMS currently in place, we're also seeing that they are supporting that with Excel. Whether that be, let's say, forecasting, as forecasting isn't up there, that's changing now with more and more new players. But a lot of customers are still using Excel. So looking at this, great, I'm roughly on that point with 50% currently using a TMS. We also have 28% currently using Excel. We're in the process of implementing a TMS at 11%, and then we do not use a TMS but rely upon an ERP. So luckily, the overall majority are using a TMS. So this I will try and keep in relation to what you can do to improve your current TMS. And also then the next majority is those not using anything at all. So I'll try and relate that into this session as well, where we can go through and outline the benefits of a TMS. Some of the hurdles traditionally have always been around cost and implementation time, where I think with new players in the market and acquisition and mergers, we're seeing those two biggest hurdles reduce. So let's go through and outline making the most of your TMS and why do customers adopt it. Now, as I said, if you want to add questions in the Q&A and outline why you have adopted the TMS, what were your sort of drivers, I would try and call those out as we're going through this and try and bring that into conversation as well. So let's start with the very basic. And I'm sure most of you, this will be teaching you to suck eggs, but let's go through it anyway. So why do customers adopt a TMS? And what I'll try and do is I'll try and use an example of a typical international company that has several subsidiaries with treasury departments that only have a few staff. This is highly common. Treasurers are being asked to do more and more with less. However, hopefully we've seen impact of COVID with more and more companies pushing funds and activity into Treasury, and they're now realizing again how important it is. So this company faces the major challenge of capturing complex data and at the same time meeting extensive payment security requirements. So what we're looking at effectively is a company without a TMS and this company with a TMS. So we'll start by saying, looking at this company without a support system, and it's a bit of sort of chaos versus control. So outlining the current company, we look and see the Treasury usually receives important information late and from various sources via complex processes. Now, those complex processes can be a SharePoint, they can be emails. When we're in the office, they used to be by paper and everyone handing out documents. It was very disparate and very hard to get insight or information timely and also collectively in a similar format. Subsidiaries often need to be chased several times to provide outstanding reports on previous period and complex tables with planning figures for the future, and collecting that subsidiary account information. We've seen customers really struggle with that being provided on a timely basis. No matter where you are in the world, it's almost impossible to exert enough power on someone to say, give me that report now. When you need it, it's always going to be a bit late if someone else has got something else to do. So within this group, there's no overall view of the financial transactions and no summary of the current financial situation that's easily to grasp. So that's if they don't have a TMS. It's disparate, and we'll go more into what disparity means with regards to systems and banks. But a company with a multi-bank TMS has effectively the ability to capture on a single platform all this available data from all the entities. That's done by connecting to the bank to bring in those account statements that are automatically collected and imported into it. All the processes, whether in relation to the planning data of individual subsidiaries, or cumulatively payments by head office, are transparent and controlled in this system. We're bringing everything into one place. So the treasurer now sees where money is and needed, the company controls, and where the payments need to go. So the benefit of having a TMS, by connecting not just to the bank, but also connecting to the ERP, connecting to trading platforms, connecting to expense management systems. I got off a call today with a large group in the Middle East that wanted to connect their expense system into ours and then reconcile and also provide reports back to the expense management software to see where the variances are. So it's no longer just looking at banks and ERPs. We're integrating with trading systems. We're integrating with payment service providers. We're integrating with, as I said, expense management, invoice management systems. So you should really think of a treasury management system as being a center of the universe, not just multi-bank, but multi-internal system as well. So once you've got all that connected into this, what's the reason behind it? It's going to optimize your cash and liquidity management. It's going to be able to compile thousands of bank statements automatically depending on your structure. It's going to achieve a fully automated process of giving you an accurate cash position and future forecasts. This is done by bringing in your book transactions from the ERP. If you're looking at trading systems, it's going to bring in your forwards, etc., to bring you a future cash flow impact into it. Your debt portfolio can be brought in to show you interest and principal payments. And then this is all going to provide you real-time reporting and communication to your peers in your company. Now, this has become extremely important during the pandemic, is you are being asked as a treasurer to report, just not daily now, it's also intraday. Different iterations of forecasts are being required continually throughout the day, saying, where is our position now? Have we changed from this morning to this afternoon? And all of it's going to be able to, as we've always said since 2008, to improve a corporate treasurer's ability to make strategic decisions and utilize that working capital where possible. We'll touch on data later, how more data allows you to make more intelligent working capital decisions. But basically what we want to do is automate as much as possible, decrease the time you're spending on manual tasks. Around the payments flow as well, we're looking at decreasing payment risk due to manual interventions and manual processes. And then that's basically what we're looking at for ideal TMS. There's a lot of small parts within it. Now, some of you have a TMS. I'll be interested to see what gaps you had, or if you do have any. And also for those that don't have a TMS, what's sort of preventing you from selecting one? Now, we've seen some horrific programs and TMSs run. We've also seen most majority have been very successful and very happy. Now, the common gaps we see in this are mainly around connectivity. Now, what I mean by connectivity is not just connectivity externally to the banks, it's also connectivity internally. And as I mentioned, data is a huge importance for a TMS. In fact, it's the fuel that keeps it going. So the gaps we see is often we go into a project and someone says, well, I have my banks connected to the ERP already, so I'm fine. About 5 minutes later, we always ask the question of, right, how do you do, how accurate is reconciliation? It says 100%. We're like, wow, that must be fantastic. Your ERP is 100% reconciled against your bank. But what often transpires is actually they only got 2 of their main banks integrated to the ERP. And we can see, I had a conversation last week with an American firm saying we have 1 bank relationship. I was like, cool, that's pretty easy. But it transpired that that was his head office. Beneath that, there were 27 subsidiaries, all of which had 2 or 3 banking relationships. And there was no insight into that cash position and even daily reconciliation. So we've then transpired to work with them to connect those 26 subsidiaries into our system and then provide that to the ERP, which luckily was one central ERP, to give them that insight. But often we see that 100% of connectivity is unachieved because people have settled with either the ERP or they've settled with their primary banks. Now, this shouldn't be the case. Some arguments were made in the past that they're tier 2, tier 3, they don't have an MT940, they're not part of SWIFT, they're not part of the BI network, they can't do through SFTP. With the advent of APIs, with the regulation changes in Europe, we're also looking in the US that's impact for APIs with tier 2 and tier 3 banks. Looking at aggregators like Token.io, Plaid, working with Visa, 100% visibility is now more possible than ever before. And this also reflects internally. You should always look at a TMS as a technology system rather than the treasury system. What I mean by that is internally, you've got to connect everything because you have to get these data feeds into the solution. So we often say on the C, great, ERP is connected, but that's it. We don't have these trading platforms connected. We don't have the expense management. We don't have the invoice management systems connected. So you really need to see when you're evaluating a TMS or asking of your current provider saying, why haven't we got everything linked in? Another common gaps to see what we're doing is, of course, the partial functionality and user restrictions. The idea of democratizing the workspace should be across every provider's ethos. And what I mean by that is you shouldn't be restricted of how well you can run your treasury by how much money you have. You should be able to utilize all your users in there so everyone's working within one system. And of course, with the different number of users working within the system, it's very important to enable your software to have great UX and UI. Is what you don't want is someone to come in and go, wow, I've never seen this before, not even like a bank portal, is completely off this planet, and be lost in it. So you need that UX and UI to be very simple. And that is changing with COVID. We've seen a number of people come onto the Treasury functionality or Treasury without having much experience before, and they're sort of put off by using their own business and home apps to now coming into a complex TMS. Now, so if you look at the connectivity and the functionality, what that all enables is data can be tamed from multiple sources within a business and from outside the business and bring it all in. And this wealth of data that exists in the corporate systems like the ERP and TMS is where we can differentiate ourselves from our competitors, our peers. Because data analytics and techniques like machine learning and predictive analysis are actually now coming to the forefront and enabling treasurers to make financial decisions that are not sort of short-term, but also long-term, and they have a vast amount of power behind them. So the real value lies in combining the enterprise data and the bank data and getting that single overview of summary of all of this in a visual dashboard and showing a business's key performance indicators without a system making it easy to integrate is almost impossible. Now, sadly, with the impact of COVID, we've seen a huge uptake in fraud. this fraud can be, for example, from the CFO coming in via email and requesting funds to be transferred to this provider. So if you exist without a payment system or a TMS system, you are extremely exposed to internal fraud. Everyone's so on edge at the moment about getting things done in a timely fashion, and it's coming through a process workflow that may not have existed very long, because people are going from a manual, as I said, home office-based environment to now a home virtual environment. So if you look at a company without a TMS, you're exposing yourselves to fraud from single payments. You're looking at also a incomplete secure process flow from a file upload into a bank portal or into a TMS, would then expose itself to master data manipulation. As I said, you have a call from the CEO saying, I want to instruct millions to be transferred, and a loyal employee will say, yes, of course, I will go and do it now, to get into the favor, and has been executed to do so. So a lack of practical security precautions has allowed a large number of fraud, or increased number of fraud, to come away from COVID. So if you look at a company that has utilized a TMS or multi-bank TMS or a payments hub, they can really eradicate most of those security challenges within the technology and within their business. So if we go on to the next slide whilst I reconnect onto this, if there's any Q&A, please do let me know as we go along. So what are the benefits of integrating like a TMS and a multi-bank TMS platform for payments? Are numerous. It creates a center of excellence for payments and collections on behalf of the enterprise, and more typically, it's more focused, if you don't do it, for the whole enterprise by geographical region. So the whole idea is you can see the money in, you can see the money out, and then what you have is the money management in the middle. So the full cash cycle can be controlled within our system, and that's quite interesting. We've seen, let's say, the acquisition by Bell and Cooper. We're now part of Bottomline purely because of this. We've now got the full life cycle of the cash management in the system to come across this way. So what we'll do is we'll go through, and let's say, if you look at a company again without a TMS payments hub and what they're open to, and then we'll go through into how it impacts with a current company. So if you look at a TMS on Excel, a company on Excel, what you have is each subsidiary has its own historical structure, which has evolved over time, and various payment solutions may be in place. You may see that beneficiaries are simply stored, and you're overriding those beneficiaries in a solution or bank template, so you're open to paying someone incorrectly. The many banking connections and large number of people involved in the payments present countless opportunities, as I mentioned before, for fraud and manipulation, especially around the manual upload of file and beneficiary manipulation. We've seen instances where ERPs being maintained and upgraded, where there are users that never enter them normally are now able to access the master data within them and potentially could manipulate the payment instructions. So what we've done in the past is say, right, that master data used to exist in the ERP. Let's maintain it there, but let's take a snapshot of that master data, integrate it into the TMS. And whenever we then receive a payment file, we can check the beneficiary's details to the old master data and flag if there's any difference between the two. So again, another layer of what can be done very quickly and very easily when maintenance on the ERP done, or let's say you're uploading new information you want to cross-reference each time. And using various tools is complicated, and again, it leads to natural errors, and users can ignore security instructions if they've just got a bank token. So I think my takeaway from this is master data management is key. If you're not using a TMS, you have to find a way to control it. In addition to the multitude of banking solutions and tools, there's also a multitude of systems in which the master data is managed. So as I said, the ERP can control it. You can look at the payments team, they may control all of that. And again, fraud is there. But if you look at a company with a multi-bank TMS, all the entities of the company use a single platform as the only banking tool for group-wide payments. This provides security on user side and also controls from, let's say, an audit point of view. So this master data is managed in a single system. Potentially only a few administrators have access rights, and new entries or change in master data must have multiple approvals. So we see this a lot of the time when we're going through showing customers and asking about their current process, they say more or less that anyone can pass me with a paper with a new payment or beneficiary on. We can go and pass along, and if you don't know enough information, that will get lost and accepted. So within the solution, it's very important to make sure there is a complete segregation of duties, and also any changes to the master data must have a multi-approval on it. So with a TMS, you have then a single point of entry to sensitive payments, enabling efficient protection access that can be viewed via two-factor authentication, single sign-on, segregation of user rights within the solution, and that will all then lead to you having a much more secure workflow, preventing the highest risk, which is also internal fraud, but also external. So many payments can be processed if you have got a TMS payments hub, all automated, eliminating the errors, and again, the fraud prevention. Finally, Treasury has an overview of all processes at all times, and can act timely in a fashion. If you look at something that you don't have a payments hub, it will always be retrofact of the event. So you will see that, oh, right, 500,000 gone out that shouldn't have gone out, or I needed that to pay another vendor. It will always be after the event, unless you have insight on a timely process and a timely matter. So looking here, so security, standardization, and interfaces. Security, as we said, is the key when looking at a payments hub, and the benefit of it is a more secure environment. Single payments are among the most fraud prone, as I mentioned before. Companies without a TMS do not have secure process flows, meaning individuals, employees can deliberately or unintentionally initiate falsified single payments. If we look at it from a multi-bank environment, this eradicates it all. So you can see that on number 3, the centralization is core. But also, if we go across and see, not number 4, because that's pan-enterprise visibility, that's inherent with the TMS. But actually, number 5 is a very important matter. One of the biggest benefits of looking at a multi-bank payments platform is, of course, reformatting capabilities. Now, what I mean by that, and we'll touch on the connectivity in a bit, is if you have an ERP or you have many different ERPs, they will provide different levels of information and in different formats. So we work with a Swedish group called Mekonomen that have, I think it's 6 different ERPs and about 13 different versions across them. Now, some can already provide an XML ISO format for us to send to the banks, but most can't. Most will provide us with a simple CSV that we need to take and absorb into our system. And depending on which bank you're working with and which country you're working with and type of payment, they will require different formats to be sent to them. So we take that CSV, we then read it, and with a payment, what we call a payment factory manipulation, change it into the corresponding format required by that bank. Now, what we're seeing a lot of recently with the API side of it is it's very quick to set up, granted, but it does lead ourselves to banks to change their requirements frequently. So if you are using just yourself in the bank portal, you may be adding new types of payment, asking for new information. As long as we can take that from the ERP in a CSV or wherever it exists, we can then create any format changes in our solution. And we're working with thousands of banks over the world with Bottomline, TreasuryXpress, to know when these changes are happening, and we will enact them probably before you even know. So one of the benefits, one of the main ones we see is prevention of any reformatting issues, because trust me, most of your IT team won't know what a payment file should look like, and we will work with them to integrate the right level of information. And this is continual. It's not like a sort of one-shot hit and off you go. This is always happening. So if we go through the validation of payments, number 8, this is, of course, one of the best practices and should be contained in your payments hub, is the ability to validate payments. And again, I hark back to the idea of user numbers. You shouldn't be restricted by how much cash you have to how well you or how secure your payment flow could be. You should be able to give everyone access to the software to bring in this data, to then approve it and sign it in a workflow that matches your requirements. Too often have I seen one level only able to happen in the ERP, or too many levels happening, which is slowing down the payment process. So again, you should look at the KPIs driven around the payment hub to make sure that it's not elongating or delaying or affecting your treasury negatively because it's perceived to be too secure and too cumbersome. You want to be able to manipulate that process in a positive way to improve efficiencies and your payments cycle. As I said, the most important thing as well is the standardized bank connectivity. What I mean by that is if you see in a few moments when we go to the next slide, bank connectivity is or can be a hurdle, or at least a squeeze on your brain power, because what it will, everyone says we can do it via Swift, we can do it via API, we have eBICs, we have faster payments, BACS, chaps, we have the ability to go and send a new message type. What does that mean for you as a customer? The ideal situation is creating, let's say, a payments factory, where you can take and choose the cheapest, fastest methodology or the most expensive and quickest. You can select that and have that logic in the system. And without having a partner as a TMS who enables you to interact with their system via a multitude of methods, you are extremely limited and cannot take advantage from a system in that manner. So if I go through to the next slide, I think we have another poll here to ask where we are with connectivity. So if we go through this to this part, so if we could bring up the poll now and say, right, what do you think as treasurers? Obviously, you've had a conversation with the banks, you've been reading a lot. I see a lot of the conversations at the ACT Cash Management event have been around the API utilization and the benefits for it. What out of these 6 options do you think is a likely way forward? We have the Swift network, where clients can go there in Alliance Slide 2, or more frequently are now seeing BIC as a service. Do you think it's purely going to be based on API? Do you think that the API bureaus like a Token.io or other ones that are popping up like Yolt, etc., will be the future, or is it going to be the Swift API route? Do you think the Swift service bureaus have a place in this if they don't adapt? Or do you see the SFTPs ruling for the next 5 years? Or is it going to be a hybrid approach that's going to continue for now and forward? So I'll give you a minute to go through that whilst I have a quick drink of coffee, and then we'll move on to the next one. Personally, my belief is it's going to be a hybrid. It'd be interesting to see where the Swift Alliance API is going to end up, as I think that's going to be an extremely powerful tool, obviously with their network that exists now. But I'm also very interested in the API bureaus and how they work. We've seen some restrictions with, let's say, the API bureaus only being able to connect to the retail and business level accounts, not necessarily the corporate accounts. So it will be interesting to see if they get rid of that 90-day re-authentication, which I think they are doing in June, July, which meant that every time you wanted to look at an account, you had to go through a 90-day authentication, which if you had 100 accounts, it would be an extremely tiresome and irritating job to do so. I'm always a fan of Swift service bureaus, as they make our lives pretty easy, as everything's already integrated. They hold your hand through the onboarding journey. But this new concept of BIC as a service is extremely interesting. But we have the results in now. Thank goodness everyone has said hybrid, as I think, well, I hope everyone is right. So I do think that's going to be an approach. I don't think there'll be ever one standard. But nice to see that none of you said Swift Service Bureau. API Bureau, again, wasn't favorable. Swift SFTP, we're in around 10-13%. API is 20%, and then the hybrid. So let's assume the hybrid will be through API, SFTP, and Swift. So if we go through to the next slide, this will show you potentially how a software should look. Now, on the right-hand side, what we have is all the different banks. So we can go through and say, right, yeah, well, in this instance, 8 banks, or 7 banks it is. Some are connected through host to host. Some are connected through APIs. We've got BIC as a service through Swift. We've got eBICs as well. And you're absolutely right. Most of the projects we're working on right now, even the simple ones with customers who are, let's say, $30 million in revenue, right up to the big ones who are sort of $40, $50 billion in revenue, everyone is asking, what is the quickest? What is the cheapest? And what is the future state you think as a treasury management provider connectivity will be? So we're always working with our customers to say, right, don't worry if you've got a multitude of banks, but let's go and choose the best methodology for you and future-proof it. And again, we're not going to hold you to this saying you must stick with this methodology, because again, we don't know, or we have a fair idea, we don't always know we are right, or what's going to change in the future. And all of this means that no matter who you bank with, and let's say if you're paying 1,000 payments through one bank, we'll choose the best and cheapest way for you to do that. Where some providers out there will say you must utilize, let's say, this process, which will increase your cost of having a system and may make it unattainable to do so. But once that data is in our solution, and this is why I said connectivity is so important, there's literally limitless power you can do with new softwares. You're seeing things like high radius, C2FO come around with the working capital and discounting and creditworthiness of your suppliers, especially if you're working in manufacturing. We're looking at also how we can bring in machine learning and AI around hedging, or looking at how we can integrate that and cross that over with the purchase orders and invoicing for your cash flow analytics. It's all being brought in. And this is why I'm saying that we should also look at other softwares within your group to say, right, what can a treasury management system give them to make them more effective? And what can we absorb? There's been a lot of discussions around let's say like a complete system all in one, or do you go with best of breed and break it out? I think there's been a change from all in one to now best of breed coming around and having multitude of systems. My feeling is it will come back to all in one as and when these smaller firms get swallowed up. It's very unlikely that the small sort of niche fintech providers will grow to the same level that the larger providers do, and I think it will come back to an all-in-one system. But I think with that all-in-one system, what will happen is you will then have a very affordable solution that can go down market and further up the market. And I think with the advent of, with the rise, and as I'm speaking tomorrow actually on the eruption of neobanks, we will see that change how corporates work. It's definitely changed the SME market space, because those neobanks have no legacy. And why legacy is an issue is it holds banks back from rolling out the new functionality. And obviously some banks are reluctant to do so. But the great thing about these neobanks and the fintech providers, they're really driving change. And they're really sort of forcing these banks to say, actually, we have to up our game. Not necessarily because they'll lose market share, but because corporates are now saying we could, or we do get this functionality from the neobanks, and they're much easier to deal with. So now the larger providers and tier one banks are saying, hey, we have to take advantage of this. So what you see here is actually a case study. And again, with our customers, even if someone's researching, we're always very happy for you to speak to anyone. But you can go through and see that Avalon Healthcare, we're embarking on a journey of visibility, reconciliation, and payments. I won't take you through all of it, but they're a fairly large group with 50 business subsidiaries. They had about, I think it was 100 or so, 150 or so accounts. And the end result, most importantly, is they went live in 10 weeks. But here at the bottom, you can see that they've actually forecast the reduction of bank transaction fees from moving from a check process in the US to an ACH process by about $100,000. Now, I can tell you that's basically a third, 3 times more expensive than they paid for a system. So they can automatically start showing the return of investment with a software when you're looking at this, saying, right, we used to have fees through payments and through our manual processes of X. Even after 2 or 3 months, you'll be able to see the fee reduction, hopefully, if you've chosen the right provider who works with you to look at this, saying, right, Treasury needs to show ROI, not just numerically, but also in time saving and efficiencies. Let's see where we can go and grab that time within the system. We have quite a few of these on our website. We'll bring out more and more in the future. So please do check them out. And as I said, contact us and we'll happily even just pass you across them to speak straight away to go from there. Oop, gone back. Now, if there's any Q&A, I wanted to leave 2 minutes or so to help with this. So if there's any questions, please do ask. If not, I can go through and highlight a few more areas of what we're looking at doing with bringing in the connectivity. So I'll give everyone just 30 seconds or so to see where we are. So great. So one question is, how and when do you see cryptocurrencies being incorporated to your offering? Actually, we're doing it right now with a few remittance companies who have cryptocurrencies being tracked, so crypto wallets. They want to keep their balances in track with real funds. So we're bringing those in. Now, the effect of actual treasury, obviously we've seen with Tesla, well, Tesla working with Elon Musk, putting $1.5 billion into cryptocurrencies. I think we're going to see, not this year, potentially mid next year, some more treasuries utilize them as an investment vehicle to divest their portfolio, but not necessarily am I seeing them utilized day to day for corporates to settle or funds. I think the idea of blockchain was a huge one. It sort of peters out a bit on the effects of treasury. We've always banked on APIs, which was right cool. APIs have now come to the forefront of that. So next question is, I know Bottomline and TreasuryXpress previously both have multi-bank TMS offerings. Are these products being brought together? extremely important and interesting question. 100%. The idea is to create this idea of money in, money out, and money management, the full life cycle. So what will happen in the coming months is, obviously now they've acquired TreasuryXpress, we're integrating the softwares. And more systems will be available to be plugged into our TMS, with the treasury management system being the central hub with the offshoot technology being bought in. So effectively what you will have is a full suite of products available by Bottomline and TreasuryXpress in one view. So we're trying to create this sort of central hub of information, which will be extremely interesting. We're already working with an invoice management system in the US to bring in those invoice amounts, but also provide the discounting where applicable and late notices through our forecasting. Again, Bottomline have a superb fraud prevention tool, which we're integrating into our software, so you can see all of those flags. And also, of course, their enormous wealth of knowledge around SWIFT and connectivity to banks. So, part of the reason we're excited about this is the power that Bottomline brings and should speed up implementations. Now, I realize we've run out of time, so I'll stop there. But do get in contact if you have any questions, and I hope you've enjoyed the session.